Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The purpose is singular. I've always been that, and he has a great national profile in that of fighting against corruption and communalism.
It is important at this point of time in the country, when the country is facing strong forces of corruption and communalism all across, that all like-minded people should talk to each other on these issues and should try to work in tandem with each other.
Well, Delhi's Chief Minister Arvind Kejriwal meets movie star Kamal Haasan in Chennai. The hour-long lunch meeting followed by a joint press conference, creating a flutter in the political world. Kejriwal urges Kamal Haasan to join politics, but will he play ball? Most importantly, will we see a Kejriwal-Kamal alliance in Tamil Nadu? We'll have to wait and watch. Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. Kritika joins me from our Mumbai studio, and let's go straight to the top story tonight. One way to stimulate the economy is to strengthen bank balance sheets. But the question is pumping capital into public sector banks really the best option? That is the issue we take up on our editors' roundtable today. Now, remember, just yesterday, the finance minister had promised what he calls necessary measures to take the economy back to the high growth path. But it's no secret that the centre does have limited fiscal room. The question now is various options are being considered to perhaps relax the fiscal space to provide more fiscal headroom, but no final decision has been taken on that. That is something that is actively under consideration. It's also no secret that state-run banks are in desperate need of capital, which begs the question, is it better to inject money into banks, thereby giving them the elbow room to increase lending and then spark a revival in investment? Well, when CNBC-TV18's Lata Venkatesh spoke to the finance minister earlier today, he said all options for a better economic environment are on the table. However, he did hint at a bank recap plan, saying that weak PSU bank balance sheets are not the best thing to have when the economy needs to be supported.
I've had a series of meetings with different departments of the government, ministers, secretaries, and other economists within the government itself. This process of consultation is on. And obviously, this government has been proactive from day one. And some recent data itself raises certain concerns, and these are concerns really to do with a push up to the investment, and a lot of it also has to do with the capacity of the banks, particularly the PSBs, and therefore we are in a process of discussion, and very shortly whatever is required to be done in order to improve that environment in terms of policy, we'll certainly react to it.
You specifically say banks, so should we expect that you are thinking on lines of further...
anything?
No. You said banks, that's why. Is it recapitalizing them a little more?
You see, it's an obvious analysis that anybody dealing with the situation would make. Now, what steps we take, please wait for our decision in this matter.
Some timeline?
As I said, we are a proactive government, and therefore we'll certainly be reacting.
Some roaring spending, sir. I mean, considering
please wait for some time.
Just wait for more time. That's the finance minister in conversation with CNBC-TV18's Lata Venkatesh, but making it clear that measures are coming. But let's bring Lata back into the conversation. Lata, is capitalizing PSU banks the safer route to try and stimulate the economy? That's the big question.
It looks like a consensus has emerged on recapitalizing PSU banks, and not with just 20,000 crores. The FM all but said it when we ambushed him earlier today. Later, finance ministry sources also said that hectic plans are underway, though it isn't as if it can happen in a few weeks. It will take time to plan. The original buy-in for this came from the Reserve Bank. The intellectual argument came from the Reserve Bank Deputy Governor Viral Acharya, who pointed out that Japanese banks in the 90s, US banks in the late 80s, and even European banks after the sovereign credit crisis, post-Lehman, became zombie banks. They didn't lend because they didn't have enough capital. So the lesson is that if India has to grow, banks have to be adequately capitalized. Now, what is this recap bond? What creature is this? What the government does is that they don't have 90,000 crores to give the PSU banks. So what they do is they just give them a recap bond. That is not a GSEC. It's not a Government of India bond. It's a recap bond. So it doesn't become part of the fiscal deficit. Banks buy that bond, and that money which the government makes, it puts back into the public sector banks as capital. Now the point is, will rating agencies, IMF and all the big guardians of banking health accept this? Will they say, no, this is fiscal deficit? Of course they will. There will be a lot of grumbling from rating agencies, but the finance minister can actually argue his way that he has also tried a fundamental restructuring of banks. The IBC, the bankruptcy code, is one very good example. The other thing which he will probably wave to them is that he's also looking at privatizing. It's quite possible that that argument, that you're fundamentally restructuring, and that is why we're using this below-the-line recapitalization. Of course, the old argument of using RBI's reserves to capitalize could also be employed at this juncture.
Well, that is certainly an idea that is being considered. Bank recap bonds below the line, as Lata was pointing out, so perhaps may not raise the ire of rating agencies when it comes to fiscal concerns. But even on the issue of the fiscal deficit, and as we've been pointing out, look, the government is worried about non-tax revenues. The government still hopes that tax collections will be on target. So there is limited headroom in that sense. The question now is, will they make more space for themselves? They haven't yet adopted the FRBM or the new FRBM recommendations of the NK Singh committee. The NK Singh committee specifically says that there can be an escape clause to breach the deficit by 0.5% in very specific circumstances. But if they were to adopt that report, take it to Parliament, get it cleared by Parliament, do they give themselves that window? That, of course, is another question. But as consensus emerges on the recapitalization of PSU banks, it's important to look at the quantum of the capital these banks will need. Prashant is standing by now with the numbers. Prashant, what kind of a gap are we talking about in terms of the need for banks to actually get the support that they require?
It looks daunting, Shireen, to say the least. I mean, the one big number that I think we need to focus on is about 1.24 lakh crores. To estimate the total capital shortfall, which may arise a year from now, that is in financial year 19, and the estimates that you're seeing on your screen is from a brokerage house, Antique Broking, worked out these numbers. There are lots of moving parts. You have to assume what kind of asset growth will one see, what kind of growth in risk-weighted assets will one see, what kind of improvement, if any, in return on assets will we see. Will we see further impairment along the way? And of course, then there is the stop of Basel III requirement, where by F519, capital adequacy needs to be 9.5%. You put all those things together and you get this big number. If you can have the graphics up back again, you get this big number of about 1.24 odd lakh crores. I've just put the big sort of banks and the big numbers on your screen. I've not put the entire PSU bank shortfall. But this basically is the bulk of what the problem is. Take the first three banks on your screen, IDBI Bank, State Bank of India and Punjab National Bank. Those three, and SBI, by the way, I've not taken standalone, but the consolidated sort of subsidiaries included, you essentially are looking at SBI, PNB and IDBI accounting for about 60% of the capital shortfall, which is about 1.24 odd lakh crores. There are a couple of banks which do not require capital, according to Antique's calculations and assumptions. But I think, 1.24 lakh crores, as you were saying, the government may have to spend more for PSU bank recap on what they had budgeted in the, what they had penciled in the budget, the union budget. But I think it still is a much larger number going at the current rate, unless, of course, there is a dramatic improvement in the underlying economy, lending picks up, and then the assumptions become a lot better. But as of now, according to Antique, the big number is 1.24 lakh crores is the capital shortfall, which needs to be made good by F519. Back to you.
Well, it certainly is a tall ask, Prashant. Many thanks for that. But, once again, as we've been reporting here on CNBC-TV18 for the past 2 weeks now, the government is planning a multi-pronged approach to try and stimulate the economy. What we are given to understand from sources is that, of course, the possibility of additional fiscal headroom, that's not ruled out, but where can we actually see investments? Infrastructure, railways in particular could see a spending push. Remember, the new Railway Minister Piyush Goyal has been part of those interministerial meetings with the Finance Minister. The centre is also trying to fast-track the refund process for exporters to alleviate some pain. That is a big chunk of the pain that we are seeing. Exporters have been knocking on the government's doors, asking for faster refunds. And finally, the centre is also looking at providing perhaps more SOPs to the SME space, easier access to credit for small and medium enterprises, and also alleviate some of the pain that the GST compliance seems to be causing them. But these are all issues that are on the table. Active discussions are on. One will have to wait to see what will finally be included in that stimulus package as and when it is announced. Let's talk about the GST now. It has had some impact on the economy. Yesterday was the last day to file returns for the month of August, and we've seen a number that looks very different from the number that we saw in July. Now, speaking exclusively to CNBC-TV18, the CEO of the GST network said that 31 lakh people have filed their returns for the month of August, but he is hopeful that more people will file their returns, of course, with penalty. Now, for the month of July, total returns that have been filed now stands at 49 lakhs. So we've seen an increase in that number from 46.5, which was the earlier reported number, and that's because people have been filing after the deadline as well. But take a look at this number, and this is the state of Maharashtra. The state's GST commissioner has told CNBC-TV18 that only 4.6 lakh returns have been filed for August, and that is below the 6.9 lakh returns that were filed for the month of July. Remember, Maharashtra is the largest contributor to taxes. Now, speaking with me just a short while ago, the CEO of the GST network admitted that software complications did hamper the return filing process, again making the plea to filers: don't wait for the last day to file your returns.
So people have filed after the last date in big number.
Sure.
What we had on the last date was 32 lakhs for July month, and thereafter it has kept on increasing, and now we have reached a figure of 49. Okay?
Okay.
Yeah.
So you've reached 49 lakhs for the month of July.
Yeah, which is
Can we now talk about the month of August, sir?
Yeah, for month of August till yesterday we had 29.5, and it has become already 31 as I speak. And yesterday we had 13.76 lakh returns which were filed in one day.
A final question, Mr. Kumar, before I let you go, because there is a separate committee that's also looking into the issues related to the GST and functionality. There was a meeting that happened in Bengaluru last weekend. Can you explain to us where things currently stand in terms of being able to address some of the concerns that have been raised?
Yeah, so there were two kinds of concerns or other issues which people had. Some of them were relating to what happened on 5th and 8th of September when people were filing GSTR1, and there was a software bug which led to slowing down of filing. But on the other hand, we had tested our system with 50,000 invoices getting into the system per hour, and on 9th itself we had more than 8 lakh returns which were filed once that issue was taken care of. And then some other issues were like invoice getting error out. Now that happens because the system checks the GST of the buyer. System also checks whether the invoices are not duplicate. System also checks credit note, debit note had reference to correct invoice which is already in the system.
Right.
So these are some of the things which system does, and if it is not correct, it errors out.
Fabric, which is a very large segment of the industry, was never under the value-added tax or excise structure before GST. As a result, they are facing a situation where in their life they have never filed any returns, and suddenly they have a very complicated structured deadline base which they need to understand and file, set up IT systems, etc., etc. The whole industry, apart from having administrative problems, is also having a demand destruction problem, and is reeling under severe problem, cash crunch, liquidity crunches, etc.
Almost 20% of the MSME sectors are part of large supply chains. So those are the ones who have very quickly integrated with the GST network first. So there is not much of a problem that they are facing. The second set are, if you go down the chain, the informal sector is facing problem, and they are the ones who are kind of confronted with the existential question whether to be part of this system or whether to get out of the system. If they become part of the system, then they have to deal with the complexities of GST and GST network. Otherwise, if they don't, then they lose the business, because people increasingly are opting for the supplier who is GST compliant.
The GST Council, I am saying, is unfortunate is not meeting. Even next month is going to be video conferencing, which does not allow us to have a serious in-depth discussion of these issues. GSTN. Now there are too many glitches which are being taken care of, but it's irritating. E-way bill is not ready. I think the problems that the SME sector is facing is going to persist and have a serious implication for the growth of GDP itself.
Moving on from GST, here's the other big headline from North Block. The Finance Minister has dismissed reports that Chief Economic Advisor Arun Subramanian has resigned and has said that the CEA will complete his tenure. In fact, on the contrary, we learned from some government sources that the CEA may get an extension. Arun Subramanian's current tenure as a CEA will come to an end in October this year. Let's do a very quick check of how Indian equity markets fared in trade today. It was a volatile trading session on the last trade today, with both the Nifty and the Sensex ending the day on a weak note. Nifty, however, managed to settle above that 10,100 mark, while Sensex closed the session by shedding close to 30 points. Similarly, on Mistry, the rupee weakened to a 3-month low against the dollar today and closed at 64.80 rupees versus the dollar, while 10-year bond prices declined to 4-month low. But Shireen, it was an interesting day, but a bittersweet day for Cyrus Mistry, wasn't it?
Yes, it certainly was a bittersweet day for Cyrus Mistry, and that, of course, is the big headline that we do have coming in. But before we'll get to that, here's our colleague Yash Jain, and he joins us now with giving us an explanation of what has really happened at the Tata Sons AGM. Yash, take us through that. So, all clear there at the AGM for Tata Sons to go private?
Well, yes, it's the first hurdle which has been taken out, with the Tata Sons board giving its approval for turning the company into a private limited company from the current public limited company in today's annual general meeting. And if you really look at the shareholding pattern of Tata Sons, with Tata Trust and the various Tata Group companies holding over 75% of the shareholding, it was quite clear that the decision had to be in favor of the Tatas. But also what I've given to understand from my sources is that the Shapoorji Pallonji Group, which holds about 18.4% stake in Tata Sons through its two companies, which are Cyrus Investments and Sterling Investments, did raise certain objections as far as the proposal of turning Tata Sons into a private limited company is concerned. But yes, it was 75% of the shareholding vote which was required and which has been received by the Tata Sons board. Now, going forward, of course, the board will have to approach the National Company Law Tribunal, or NCLT, for their approval for this particular proposal of turning Tata Sons into a private limited company is concerned, where we are given to understand that there could be certain objections which would come from the Shapoorji Pallonji Group again. But of course, it remains to be seen how and if the NCLT finds any material in the arguments which come from the Shapoorji Pallonji Group.
This applies to all shareholders simultaneously. It is not that to the exclusion of one shareholder some action is done. And the secondly, it is right from last 100 years, the nature of the company has been the same. The restriction on the transfer of shares that was existing for last 100 years continues to apply. The same restriction applies. So there is nothing which has changed for any other shareholder over a period of time. The only thing that has changed is that earlier for public limited company, certain corporate governance norms were applicable mandatorily. Now they will not be applicable mandatorily, which the company has changed their articles and has adopted to opt the same as a voluntary basis.
I was absolutely convinced that this would happen. What I would like to make sure on behalf of all the minority shareholders is that none of their rights get affected in terms of ease of transferability.
Okay.
And as I was listening into the earlier conversation you were having, I believe that the articles have not been changed to make the forum of possibility in terms of who people can sell their shares to truncated.
Okay, now on to the other big story. An appellate tribunal today allowed his investment firm, that is Cyrus Mistry's investment firms, to pursue charges of oppression and mismanagement against Tata Sons and others at the NCLT on the basis of merit. But it wasn't a completely clean day for them. Ashmit Kumar joins in with the details. Ashmit, explain the appellate tribunal's order for us and also tell us what is expected in the case now. One case has gotten relief, but the other hasn't.
Well, the National Company Law Appellate Tribunal giving much-needed relief to Cyrus Mistry. In effect, what the order, the substance of the order essentially is that now it allows Cyrus Mistry to revive the application of oppression and mismanagement before the National Company Law Tribunal. Now, we'll come to the nuances and the implications in just a bit. But first, to appreciate those nuances, three things that we need to keep in mind. First up, the companies in question. Cyrus Investments, Sterling Investments are the two companies which are the family holding companies of the shares in Tata Sons. Both these companies were in appeal before the NCLT as well as before the appellate tribunal. The questions that have been raised, two of them importantly, one is of mismanagement, the other of oppression of minority shareholders' interests. And third thing, and this is the most important thing here, that under the Companies Act, shareholding of 10% is required if one shareholder is to raise questions of oppression and mismanagement. Now, what's interesting here is that as far as Cyrus Mistry shareholdings are concerned, it's slightly north of 18%, but when one accounts for preference shares, that shareholding, that figure falls to 2.17%. Keep that in mind. Now, this was the reason that, in fact, Cyrus Mistry moved the NCLT seeking a waiver from that 10% threshold clause. But NCLT held it very clearly that it's black and white. The Companies Act makes it very clear that this application becomes non-maintainable, and on grounds of that, NCLT had dismissed Cyrus Mistry's application. Expectedly, Mistry then moved the appellate tribunal, again raising similar questions, seeking a waiver, importantly, from compliance with that 10% threshold. And this is what leads us to today's order. Two parts order. First part. In the first part, the NCLT has dismissed Mistry's application, citing it to be not maintainable. But the second part is critical here, and that is where the rub lies. The appellate tribunal making it very clear that it has granted waiver to Cyrus Mistry on account of the prima facie observations. Prima facie, the appellate tribunal believes that the concerns that have been raised do warrant an adjudication, do warrant some deliberation. And on that count, taking this to be an exceptional case, granting that waiver, allowing, importantly, Cyrus Mistry to now raise these concerns back again before the National Company Law Tribunal. But in the same breath, important to point out here, not the end of the road as far as Tatas are concerned. The remedy is still available with them. They can still appeal against this order before the apex court. So that option is still there. So clearly, as far as the road forward is concerned, all contingent on the road that the Tatas take from this point on after the NCLT order. Back to you.
Ashmit, appreciate you joining us. In fact, Ashmit spoke with the counsels from both sides after today's order. Aryaman Sundaram, Cyrus Mistry's counsel, said that their stand had been vindicated at the appellate tribunal. Take a look.
The National Company Law Tribunal had misapplied the law and seemed to have misunderstood the case in its entirety, which was the ground of our attack before the tribunal, appellate tribunal. And we're very glad that our stand has been vindicated, because the appellate tribunal has said that while that 10% rule will apply to an overall shareholding and not just to the equity shareholding, and therefore the petition is not maintainable as a matter of right because of the because of the 10% shareholding. Nonetheless, a prima facie case has been made out, and this would be a case for waiver to be granted, especially in the facts of this case, which is exactly what we had argued before the NCLT.
As per the Honourable Tribunal's order, the NCLT Mumbai has been asked to dispose of the petition within 3 months. So that is what the order says as of now.
Well, that is the latest in the Mistry versus Tata battle, where this will now move to the NCLT in Mumbai. But let's now talk about the Chandra brothers at Unitech. There is no end to their trouble, as the Supreme Court has denied them bail yet again. And that's not all. The Apex Court has also asked Unitech homebuyers to choose between possession of their flats or a refund. Manisha Natarajan is standing by with the details. Manisha, the Chandras denied bail for the third time this month. But what does it mean now for homebuyers?
Well, definitely the news is getting tighter for Unitech promoters. In a major setback, the Supreme Court today denied interim bail to both brothers, Ajay and Sanjay Chandra. Now, this is a case which was started 3 years ago by Anthea Homebuyers and has now expanded to include 16,299 stuck homebuyers. In the previous hearing of 15 September, the Supreme Court had appointed an amicus or a court officer to collate data on how many buyers are stuck in unfinished projects. Today, the amicus, Advocate Pawan Sri Agarwal, presented all the data from 74 projects to the court. And as per the submission, partial possession has been given only in 13 projects out of total 74. The total outstanding liability of Unitech to home buyers is over 7,000 crores for the unfinished 61 projects. In the last hearing, Supreme Court had also directed the amicus to set up a website where stuck home buyers could either file for a complete refund or their completed flats. That portal, www.amicusunitech.in, is ready, and today court has directed that the portal should be made live and all home buyers are invited to enter their option of refund or possession on portal from tomorrow onwards. The next hearing date is 23rd October. Court-appointed amicus has been asked to present the final numbers of buyers asking for refunds and those settling for possession of their apartments. In fact, the Supreme Court came out very strongly against the Unitech promoter, saying if the company is unable to refund the money to all buyers who want it, the court itself will appoint official liquidator to auction the properties.
All right, Manisha, appreciate you joining us. So that is the website that you need to visit if you are an aggrieved home buyer